Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us, and we can see that gold is standing at 1985 right now. And if you look at the chart of gold, then we can see the market is sideways right now. If you look at the overall trend of the market, then obviously there is no doubt that the overall trend is very bullish. But if you look at the present trend of the market here, or if you're a day trader, then for you the market is sideways. Okay, so you need to plan your trades accordingly. And most importantly, if you're a swing trader or positional trader, you need to sit on the backbench right now, because tomorrow's NFP will be important. After NFP, okay, you can look for positions, but before NFP it is better to avoid the market if you're planning to hold your positions for a couple of days, because this is a day traders market. This is a market where you should be looking for quick entry and exits. Before, when the market was trending, I told you guys clearly that that market was not a day traders market. It was a market where after taking a position, you simply need to sit on the market and just watch the profit growing. But right now the situation has changed, and we can see that we have a sideways market. As a result, we need to look for quick entry and exits. And most importantly, okay, again, most importantly, um, the reliable levels on the chart of gold are right now 2008, no, 2008 to 2010. This is the resistance, and then we have 1960 to 1963. So this is the range of the market right now, and right now you can see the market is trading in the middle. So the current market price is far away from the reliable levels. So as a result, you need to be extra careful. Obviously, during the day, if you see market going up and market reversing from the resistance, you can look for a sell position. Simply switch to a lower time frame like 15 minutes time frame to observe the market behavior. If you see the market is showing price rejection from above, you'll get a confirmation that yes, sellers are still present, and you can look for a sell position. Similarly, if you see the market after hitting 1963-62 level, market is showing price rejection from below, will give you the confirmation that buyers are still present and you can look for a buy position. But the problem is these two levels are far away from the current market price. Market is stuck in the middle. So as a result, the levels right now are not very reliable. Okay, and as we all know, yesterday it was a day full of events. We had ADP, NFP, we had PMI, then we had FOMC, but sadly market failed to take a particular direction. You can see here gold gains as dollar, yields slip after Fed keeps rates steady. Gold prices edge higher on Thursday as the US dollar and bond yields slip after the Federal Reserve held interest rates steady and acknowledged the tighter financial conditions faced by businesses and households. This was the outcome of the FOMC. Okay. Gold closes lower ahead of Fed decision to hold rates unchanged. And if you look at the economic calendar, today also we have news coming up, initial jobless claims, but don't think that initial jobless claims will be changing the direction, because right now the market is waiting for tomorrow's NFP. So yes, there will be some volatility, temporary volatility, but it will not be a trend changer today. So mostly you can expect that market will be staying inside the range only. So the major resistance is far away, the support is far away, and in case market breaks the support here, do not consider it as a complete trend reversal, because we have immediate support around 1954 again. So on the chart of gold, we have two support, 1963 to 60 and then 1954. So in case 1963-64 doesn't work because of extreme selling pressure, you can also look for some support around 1954 level as well. If you see market taking support and going up, then only go for a buy position. Keep in mind, this is market, there is no guarantee. So as a result, you need to observe the market behavior. Day traders, during the day, if you see the market is coming down, then you can also look for a temporary support around 1970, and you can go for a quick buy position around 1970. How much you can expect? 25 to 40 pips, not more than that, because this is not a major level. Okay, so observe the volatility of the market. Probably you have heard me saying many times that volatility of the market plays a very important role. So if you see the market is going down with small candles, you'll get the confirmation that okay, market is going down, but there is not much volatility and volume. Then you can look for a supporter 1970 as well. If market bounces for 1970, you can go for a buy. And scalpers, we also have buy position above 1992, but this is a very risky level. Okay, 1992, buying above 1992 is not a very clean breakout, but in case if you see the market is going above 1992 with big green candles, then you can go for a buy position. How much you can expect? 30 to 40 pips, not more than that. But if the market continues the upside, then if you want, then you can continue. But yes, we can see that if market breaks 1992 level, we have further upside of at least 30 to 40 pips. See, this is a lower time frame here. Right now I'm on a 15 minutes time frame. So we can see that previously when market fell from 1970 level, market reversed. So yes, 1970 we have got some buyers. So today if market comes down with not much volatility, we can expect that around 1970 around 1970 market will show a temporary bounce. Similarly, if market breaks 1992, we can expect a temporary upside. So day traders, we can look for a buy position. So let me recap. After FOMC, we do not have any particular direction in the market. Mostly the market is waiting for tomorrow's NFP. To be honest, I have seen that whenever market wait for a particular news, then most of the time market usually disappoints. Okay. And right now we have a sideways market. So as a result, swing traders, positional traders, you need to wait for tomorrow's NFP. Maybe the weekly closing will give you a proper idea about the market. So as of now, day traders, you should be looking for level to level only, especially quick entry and exits, because the market has changed, the market sentiment has changed, and we can see a sideways, more or less a choppy market. The major levels of the market are around 2008 to 2010 as the resistance, and we have 1960 to 63 as the support. So if market reverses from these two levels, we can look for a buy and sell position. But the problem is that right now the current market price is stuck in the middle. Okay, so as a result, the levels around the current market price are not very stable and reliable. If market breaks 1992 level, and if you see that market is bullish, you can look for a quick buy position. Do not expect much. It is a little risky trade. So scalpers, you can look for 25 to 40 pips. If you see market continuing the upside, then you can go ahead. On the other hand, if you see the market is dropping, okay, if you see market is dropping, you can look for support around 1970 level as well. If the volatility of the market is not very high. And in case market comes down with very low volatility, 1979 may also act as a minor support where you can expect a minor bounce. And in case market breaks 1960-63 level, the next support will be around 1954. So that's all from my side, my dear friends. And today also we have a news coming up, but do not expect a complete trend reversal. There may be some temporary volatility for 1 hour, one and a half hour, but yes, market will be waiting for tomorrow's NFP. So that's all from my side. As I always say, my dear friends, be a trader, not a gambler. And it's a sideways market. Do not enter on the middle of the chart. You'll be trapped, because most of the time we look at the chart, we lose our patience, and we take an entry on the middle of the chart, and as a result of which we get trapped. If you look at the profit and loss statement of yours, you will see the most of the bad trades happen only because you took entry on the middle of the chart. Okay, so follow proper risk management. Bye bye, take care, see you tomorrow.